Islamic finance versus conventional finance, understanding the differences. Islamic finance is a financial system that operates in accordance with Islamic principles and laws, primarily derived from the Quran and the Hadith, sayings and actions of Prophet Muhammad. It is fundamentally different from conventional finance, which is based on interest, riba, and often involves speculative activities, excessive uncertainty, gharar, and investments in prohibited sectors such as alcohol and gambling. Here's a brief explanation of the key differences between Islamic finance and conventional finance. Prohibition of interest, riba. In Islamic finance, charging or paying interest is strictly prohibited. Instead, financial transactions must be based on profit and loss sharing arrangements. Islamic financial institutions use various structures like mudaraba, profit-sharing partnership, and musharaka, joint venture, to ensure that both parties share in the profits and losses of a transaction. Asset-backed financing. Islamic finance emphasizes real economic activity and requires that financial transactions be backed by tangible assets or services. This ensures that money is not created out of thin air and that investments have a real economic purpose. Risk sharing. In Islamic finance, risk sharing is a fundamental principle. Unlike conventional loans where the lender is guaranteed a fixed return, in Islamic finance, the lender shares in the risks of the business venture and only earns a return if the venture is profitable. Prohibition of speculation, gharar. Islamic finance discourages excessive uncertainty and speculation in transactions. Contracts must be clear and specific, and both parties must have a good understanding of the terms and conditions. Ethical investment. Islamic finance prohibits investments in sectors considered unethical in Islam, such as alcohol, gambling, pork, and companies involved in excessive debt or interest-based transactions. Zakat. Islamic finance encourages the payment of zakat, which is a form of almsgiving, to support those in need. Many Islamic financial institutions incorporate zakat into their operations. Prominent Islamic scholars who have supported Islamic finance include Dr. Muhammad Taqi Usmani. He is a renowned Islamic scholar and an authority on Islamic finance. His book, Introduction to Islamic Finance, is widely cited and has contributed significantly to the development of Islamic finance principles. Dr. Omar Chapra. Dr. Chapra is an economist and Islamic scholar who has written extensively on Islamic economics and finance. His book, Towards a Just Monetary System, presents a comprehensive view of Islamic finance. It's important to clarify that there are scholars who may have criticisms or concerns about certain aspects of the practical implementation of Islamic finance, but it's less common to find prominent Islamic scholars who are outright against the concept of Islamic finance as a whole. Islamic finance, in theory, aligns with Islamic principles, but challenges may arise in its application and compliance. One scholar who has raised critical points about the practical implementation of Islamic finance is Dr. Jasim Al-Shamsi. Here's a quote from his paper, Challenges and Opportunities of Islamic Finance. Despite the rapid growth of the Islamic financial industry, there are several challenges that need to be addressed. Some of these challenges include the replication of conventional banking practices in Islamic finance, lack of standardized regulations and governance, and issues related to the Sharia compliance of certain financial products. Another scholar, Dr. Akram Laldeen, has also expressed concerns about the practicality and effectiveness of Islamic finance. While he is not necessarily against Islamic finance as a concept, he has raised questions about its development and impact. Here's a quote from his paper, Islamic Banking and Finance, on its way to globalization. Islamic banking and finance have undoubtedly grown, but there are lingering questions about their effectiveness in truly implementing Islamic economic and financial principles. The industry needs to continually reassess its practices to ensure they align with the spirit of Islamic ethics and principles. These scholars' critiques center around issues related to the practical implementation of Islamic finance and its adherence to Islamic principles rather than outright opposition to the concept of Islamic finance itself. It's important to note that these criticisms are part of a broader discourse aimed at improving and refining the industry to better align with Islamic values. For more videos like this, please subscribe to my YouTube channel Investor Affairs.